Universiteti Vitrina.
Then, once the company was making all these trailers in their books and their explanations to the companies, they use their rules are having the good looking whatever, so they make the maquillage of their balance sheets and everything. And Arthur Anderson gives the approval. Then they say, for example, they say this electric holding company, distribution company, is called Enron, probably you heard about it. Enron says there's electric stock. Is this one, but electricity cannot be made in storage. They only can be able to be produced. So they put their balance sheets much higher. But when one day in electric cut in 2001 in California, then they said, okay, use your stocks and produce more, but they couldn't be able to produce. It's the first time happening in California. So some people that died in the hospital because of the electricity balance. Then they looked at the balance sheets of the Enron, and it's given and it's approved by the Arthur Anderson. Later Arthur Anderson has been closed. Then Sarmons and Oxley, two of the American representatives in the Congress, they give a law, so they put the rules of the company's auditing rules. So now people are, in all the countries, are trying to apply the international rules of the all these auditing standards. This is the Sarbanes-Oxley Act of year 2002, which tries to give the right information to the people. So this is again the company's organization of the financial management function, board of directors, president. Then we have the vice president of the finance, for example, some of them in operations, some of them in marketing. Going to write the thesis or whatever, always keep in mind, because I'm always trying to represent this in the critical manner. So these are the things that's working, these are things that's not working. In Turkey I'm also doing like that. So keep in mind. Okay, let's have a break now. The tax environment, the financial environment. So business environment is when the US has four basic forms of the business organizations. Sole proprietorship. This is the, if you have an advising company and or if you have a company by your alone, so valid in Turkey, probably in Albania too. So one person opens his own company. So this is sole proprietorship. He is the only owner. Then partnership. Partnership is general and limited. So that means that a few people comes together and opens a company. This is the partnership. Then we have the corporations. Corporations are big companies and it's owned by many people. Then limited liability companies, it's like the construction companies. They form a company after the 1 or 2 years later construction finishes and the company goes. So this is the limited liability company. Then sole proprietorship, a business forms of which there is one owner and this single owner has unlimited liability for its debts of the firm. So by personally he is responsible for the debt and gains of the company. So all this form of the business organization and the business income is concerned for your personal income tax form. So they are responsible for the income taxes. Sole proprietorship advantage, simplicity, low setup cost, quick setup. These are advantages. Single tax filling on individual forms. Disadvantages are the unlimited liability. Hard to see the additional capital, because if you are owned by one person, sometimes the banks are hesitating to give the loan to one person companies. If he dies, then the money goes, so that's why they don't want to buy. They don't want to give the money. Transfer of the ownership difficulties. Then partnership is a company form of a business form of which two or more individuals act as owners. Business income, is accounted for each partners the personal income tax form. So company gets the income tax from them. General partnership, all partners have the unlimited liability, so they have all the power of all the companies and are liable for all obligations of the partnership. Bonuses form of the legally separate form of the owners. All artificial study that can own the assets and their liabilities. Business income is accounted for the income tax form of the corporation. So income tax form is very important. These are the advantages and disadvantages of corporation. That business environment, a business form of the provides to owners with corporate and limited personal liability and the federal tax of the treatment of the partnership. So that means if you are owing to certain percent of the company by having the shares or just having the partnership rights, so you are just having according to your percentage for the debt of the company, not your all wealth is responsible for the company's debt or whatever. It's just opposite to the full proprietorship. So again, you should have the individual income tax. The limited liability company is just you are responsible from the limited side for the certain percentage with respect to your shareholder side to the company. So these are the sides. So these are the advantages and the disadvantages of the limited liability company. The corporate income tax. This is an example. I'm not just going to, and you can see that how the income tax is paid in the United States. In Turkey, it's the same. Depreciation is provides the systematic allocation of the cost of the capital asset over the period of time for the financial reporting purposes, tax purposes, or what. For example, like if you buy a machine for your company and if they say that the life of this machine is 4 years, and that means each year you deduct 25% of the value of this machine. So in the second year, you just show 75% of the company is still working. But this is the accounting purposes. For the machinery, you still continue to use it in your company project, and certain years later you sell it to a different price. So let's say you sell it with $100. So if you make the accounting of this $100, this is the income. This is not the accounting type of the balance sheet, but this is the economic type of it. So that means the accounting side of the company is different than the economic side of them. Because if it's the depreciation is adopted for 4 years, for example, for the adaptation of the machinery, because in the all income tax government bodies are always declaring how many years of the depreciation is written down for each product. For example, for the cars or for the computers in Turkey, this is for 4 years. So 4 years later, it's zero in your balance sheet. But if you sell it with a certain percentage 5 years later, then this is the economic profit. This is not the accounting. So generally, profitable firms prefer to use the accelerated method of the tax purposes. Common types of depreciation is straight line, all equal years, or accelerated type. First year is 10% depreciation of the value of the asset, second year 20%, third year 30%. But in the straight line, it's all years. There are, for example, 4 years of the life is done. That means each depreciation year refers to 25% of the reduction of the value of the machinery. And this is the these examples are not important. We are going to end up. The flow of the funds of the economy. Now this is a little bit important. Why the people are having the flow of the funds in the economy? For example, if you are the household, so that means you can earn the money, certain amount of the jobs you have, or let's say you sell something, or you work in a certain place, you earn the wage. Then during the period of 1 month or 1 year, you just spend certain amount of your income for your living status. Then at the end, let's say you are earning in a year $10,000. You are spending $7,000 for your needs. You have $3,000 remaining part. This remaining part usually goes to the banking system or the financial system of the economy. Why? So there is always the fact that the households are having the positive side of the economy. Is that true? Somehow. In what countries it's true? In China it's true. In the United States it's not true. Because right now the debt of the households are having 6% of the GNP of the United States. That means minus 6%, not the positive side. But in the economic books or the finance books, they always say that the households are having the positive savers, which is not true right now in the United States. Or in Turkey it's true, somehow. On the other side, there is the banks who are the intermediaries, so they transfer the funds, so they flow the funds from the savers, from the households to the companies. Companies are always having the negative side of the loans because they always want to invest, so they go to the bank and they always demand loan. They pay certain amount of the these profits to the banks, and the remaining ones they also distribute to the shareholders. Also, some of them they hold for their own growth purposes of the companies. Then we have the government. Government is in some countries it's on the positive side. Some countries they are on the negative side. So they issue the bonds. They issue the certain things to the people. So they have the certain amount of resources from the government, from the people, and the government makes their own budget. So in their budget, they have the tax income and also their spendings. For example, the government pays the wages to the public employees, or they make the investment, they make the roads, for example.